Hey everybody, Spartan here from SpartanTrading.com. I wanted to talk to you guys a little bit about rules and criteria, and this kind of goes out to more of the new traders. There's a lot of traders that I deal with in the rooms that I run at SpartanTrading.com, and basically some of the issues that I always see that are consistent if people are over trading or they're having trouble with knowing what to trade, where to look, etc., is just that they haven't sat down and developed criteria for themselves. Now, one thing that all professional traders have and have done at some point or another is develop this criteria. Now, what is this criteria? Now, this criteria will be a whole bunch of different things, from price points that they're trying to trade in terms of the price of the stocks that they're trading, to sizing, risk reward, to the actual frequency of the trades. Some very basics that you should definitely have figured out already is how many trades you're going to be doing per day. Maximum trades per day. This ensures that you're not over trading. This ensures that you're figuring out times of the day. Maybe you like to trade, you don't like to trade. You're not spreading yourself too thin, etc. You're also not going to be jumping from one trade into a new trade and not letting that previous trade actually play out. So frequency of trades per day definitely should be set. Frequency of trades at any given time that you're in also should be set. There's a limit to what a person can manage in terms of trades at any given point in time. I'm pretty good at multitasking. I can probably handle up to, maybe day trade wise, maybe 5 day trades to 8 at a given point in time. Now, most new traders, maybe 1 to 2 at any given point in time. As you get more comfortable, etc., you can trade a little bit more. You don't need to trade that much. You really only need 1 or 2 good trades to make what your goal is per day. But this is something you need to figure out for yourself. Be honest with yourself. If you can't be in more than one position at a time because you find that you're scrambling, you're not able to pay attention to one, and the other one's getting, you're missing sell targets, or there's too much slippage on another position, then limit yourself to one trade. But definitely something to figure out. Lastly, one of the biggest things I would say is risk reward, just as a whole. If you understand your risk reward, or if you don't, make sure that you have it written down. Make sure you've actually calculated, if the stock is this price, this is how many shares I'm going to be using on that stock. This is where my stops go from that entry, and this is what my potential profit target I want to get to on the upside looks like. If you have these things figured out, when you look at an opportunity like this current, for an example, at an entry of $12.50, if you knew that you needed to make $1 on the stock for it to meet your criteria, then based off of resistance levels on the daily or support levels, if you're going short, you can figure out that risk reward very quick. Now, once that risk reward's figured out, you can decide, does this meet my risk reward criteria per trade? If it does, great, take the trade. If it doesn't, you move on and you try to find another trade. It's key to making sure that every opportunity you place yourself within actually makes sense for you, your account, your risk reward. Now, there's all these different chat rooms out there, and that's great. If even I give you an idea and it doesn't make sense in terms of your risk reward, don't take the trade. It's about you and your account, not about the idea. So always make sure that that risk reward is controlled. Now, that's just for more of the reward side, because we always know the risk is going to be defined. We always know where that stop is going to be, given where the entry point on the stock we're going to be taking it at. We also need to be looking at the discipline aspect. So if you're a new trader, you have to understand how important that discipline is. If you're not disciplined, that's when you're going to make mistakes. That's when you're going to be losing a lot more money. So discipline, risk reward, big things right there, as well as the frequency and number of trades at any given point in time. Figure this stuff out, write it down, make it tangible, make it part of your rules that you put in front of you, and make sure that you're disciplined and accountable to those rules. Very important to have this stuff figured out, written down, make it tangible, guys. You can even give it to someone, make them hold you accountable, trading buddy, significant other, whatever, but that can help significantly. So that's it for today, guys. Just want to address that. Talk to some new, address some of the newer traders, just because this is something that has come up, presently, and I think that it's a really good video that could help anyone out there that's starting to trade. Just something to think about. Anyways, that's it for today, guys. Hope you enjoyed the video. You can visit us if you have any questions at SpartanTrading.com, and you can email me at SpartanTrading.com as well. Happy to help if you guys do have any questions. All right, guys, have a good one. Thanks for watching.